Well, let's do some more covered calls. Hey everybody, this is Spooky's Revenge. We're back with another 5-year, $500 Rags to Riches series episode, and I want to dive right in. Just made the monthly contribution, so now the portfolio is up to 3328.87, and there's two things I want to focus on. First, I want to do the speculative side. So right now, I'm going to walk you guys through a covered call on OCGN. So I've got an order queued up here to buy 100 shares at market price, which just means that I'm going to submit the order and it's going to get filled at the best possible price. So right now the stock is currently below $1, which means I'd have to buy 100 shares on Webull anyway. So let's just go ahead and do that. Let me get my face out of the way too, so I don't get in the way. Okay, so hopefully you guys can see the whole thing now. So I'm looking at the top chart here, OCGN, and again, the intent here is that if the price goes up, I'm okay, right? Because I want to sell the shares with the contract, okay? So if it doesn't, I'm going to sell the contract and it's going to make me passive money. So we're just going to make a little bit of extra cash here on this. So I'm going to buy 100 shares, okay? And you can see right here in my current position, I have a covered option strategy. So I've got 100 shares with an average price of $89.94. So I bought it lower back here. And then I sold a covered call against those 100 shares at a premium of 15. So right now that's currently worth 12, which means that I am in profitable territory both on the shares and the contract because the contract's value hasn't increased to the point where it's profitable enough for the buyer to exercise that contract. So I'm going to just do the same thing here really quick. I'm just going to squeeze in those 100 shares, and you can see it shows up as a separate element outside this covered thing. So if I collapse that, you can see, oh no, it's going to show the whole position, sorry. But anyway, down here, it's not part of this covered option strategy. So down here, I have the other 100 shares. So now I'm going to kick over to the options chain. Okay, and then I'm just going to look for a call that I want to sell against these shares. So the $1 strike price right here, again, I could probably squeeze out 15 cents. But let's see what else we got. We got 25 and 30 here, so that's automatically looking better. And that's about 46 days out. That's kind of the range that I want to target. And then 35.60, there's no volume on these. Whereas this one kind of does. So I think I'm going to sell this one. And looking down here, I can see the mid price is 28 cents. I'm just going to shoot for that, or for 25 cents. So basically, I'm just buying 100 shares and then making 25 bucks, and then potentially selling or potentially holding the shares. So I get the $25 no matter what. So let me just go ahead and sell that. Now you can see there's two covered calls right now. Okay. So this one here is the second one that I just opened. So I bought 100 shares. Okay, and that value is currently appreciating a little bit. Then I sold a call against them for a $25 premium, but it was currently worth 28 because I didn't want to try to get filled at that same price. So I just filled at 25. So it's kind of starting me at a disadvantage on the contract, but it doesn't matter because it's locked in at $1, okay, no matter what. So if the price goes above $1 and it's worth it for the buyer to exercise, they'll go ahead and do that. I also just want to grab some Neo covered calls here really quick. Sorry, kind of a little bit of a a little bit of a deviant here. So I'm just kidding. So basically, I want to take 3 of these contracts, and I want to get those filled at the last price. So I'm just going to buy 3 of those. And now I've got 7 with a reduced average of 22 cents instead of 25. So I will be looking to sell some of these calls because the leaps. I'm sorry. So I'm kind of heavy in that, but I want to take advantage of the sell-off down into support. So it's a good strong level, and if that holds, that's great. If not, I'm okay to hold these for a couple of months. So I think it's a good value down here, so I don't really care too much. But I wanted to just catch it when it comes back down here. Okay, so as far as the OCGN stuff goes, it's I now have 2 covered calls open. And if I collapse this, you can see that the total value between both of them is $7.04. That does not include the premium that I've collected along the way. So I'll just expand that back out again. So I have a total of 200 shares, and I've sold a total of 2 calls. Okay, so hopefully that makes sense. If not, again, I can always cover it in more detail, but I just want you guys to understand that this is a pretty easy way to make money. Now, I don't like OCGN, so that's why I'm selling the strike so close. I intend to sell these if the price gets up there. And if it doesn't, I want to use the value of these contracts that I've sold to reduce the cost basis of the 200 shares that I now have. So I'm a little bit heavy in the position for what it is, but I wanted to, sorry, but I wanted to show you guys that it's you know, it's okay, right? Because I'm covered in either direction. So if it goes sideways or down, I make money on the contracts. If it goes up, I lose the opportunity to make money on the contract other than what I've already done to reduce my cost basis. Because remember, I collect that premium and I keep it no matter what. But if I sell the shares at $1 when it gets assigned, that's also a share appreciation difference there per share times 100. So in this case, right, in the second contract's case, I bought 100 shares at 96 cents, okay, and I'm willing to sell them at $1 per share. So that's a 4-cent per share difference between my purchase price and the strike price in the contract. So that means I automatically make $4 if the price goes up, and that's kind of a capped profit. But I also make $25 for selling the contract in the first place. So I'm looking at a total potential profit of $29 if the price just goes up over $1. So it's pretty easy money. I invested about $96 and I'm getting $29 in return. So let's just divide that. 96 times 100, that's about a 30% profit in a little over a month, month and a half. If it, you know, it could be assigned today if it goes up that high. So it's a very tight range and I'm okay with that. All right, so beyond that, I did just make the contribution again. So I'm going to be looking to place my buys for the investment side of things. So I just want to kind of show you guys a very brief walkthrough of that process. So I've got JEPQ. So first thing I'm going to do is I'm going to map out all my positions. Let me just open Notepad here real quick, and I'll just walk you guys through this. All right, so I want to just map out all the positions that I currently have. So I've got JEPQ, and then I've got Schwab. SFE, I'm still waiting for them to just take my shares and pay me that $1.65 per contract. That might take up to a couple months to a year. So, you know, I'm not stressing out over that. It's the agreement's in place, so I'm good either way. It might just take some time. I'm not going to look for dividend stuff or additional purchases on OCGN because I just want to sell those. I just want to offload those positions. But I do want to do Johnson & Johnson, Maine. Ladder is more of a growth position, but they do offer a quarterly dividend. And I'm also not going to include the NEO, Clip, and Tesla as well. So once I have those mapped out, what I'm going to do is I'm going to pull up the tickers in here. So first one, the most important one that I have is Johnson & Johnson. So what I'm going to look for immediately is just to figure out when the next dividend payment is coming and whether or not it's in March, okay? So that's rule number one, just to filter out what I need to even look at. So I can see that Johnson & Johnson had theirs February 16th, and I've already received that money. So, yeah, sorry, I did receive it. So this one is not one I'll be looking at to buy this month, okay? So it's a very easy way to just kind of filter some of these out. JPQ and O are monthly payments, so I'm definitely going to look at those. So let me just move those to the top. And then Schwab, SCHD, that is a quarterly payment, and they had theirs in December. So in March, they're going to be having another one. You can see March here, March here, March here. So they pay in March. So mid to late March, I should expect it. So this one's going to go on the top of my list. Okay. Then I'm going to look at Maine, which again is that's a nice monthly payout. So that's going to be on my list. Ladder, I'm going to look at last, and then that just kind of leaves Clip and Tesla. So Clip and Tesla are both monthly. I probably will look for some Clip. You know, they pay out monthly, but Tesla, I'm sorry, just had the reverse split, and I kind of like the dividend aggression in Clip for now, but I want to kind of keep them balanced. So, and let me just look at Ladder real quick to see when their quarterly payment is. So December, yeah, so they have one in March also. So it's kind of a tough decision. But since I'm not buying Johnson & Johnson, I've got an extra good chunk of money that I can put into these. So, all right, so now just looking at the prices of all these, I can see that Ladder's pretty cheap. Clip and Tesla are pretty cheap. This is $16.38 per share. This is $23.02 per share. This is $11.37 per share. I'm just going to collapse this so it's easier to see all at once. So, you know, I don't have to buy. Let me just put these out here. So this is about $48. I'm just going to round up on these just so you guys can see. Schwab is 71. Well, 72, right? Because I just want to round up again. 44 on that one. And for that, I'm just looking at this number right here, if you guys can see that. Clip is 17. Tesla's 23. And then Ladder is, where'd it go? $11.37, so $12. Okay, and then O, of course, is higher. That's about $50. Yeah, there we go. All right, so basically I have about $350 to work with for these 7 stocks. Okay, so I'm not going to go through the specifics of how much in this video for the sake of time, right? I'm not going to go into all the specifics of how many of each ones I'm going to buy. That'll be next episode. But I just wanted to share the covered call stuff. Sorry about the coughing, by the way. The covered call stuff, as well as just kind of filtering out what I need to look at versus what I don't need to look at for the monthly buying. And that's it. I'm just gonna wait till the next episode, so tomorrow, because I have a super busy today. I'm not gonna be looking into anything right here. But tomorrow's purchases will be some configuration of these that adds up to roughly $350, because that is 70% of my $500 contribution. So with that said, I hate to end this one here, but I got to keep these short, and I will catch you guys tomorrow, and I'll have a more in-depth walkthrough of those shares. I'm not going to buy anything right now. I just wanted to walk you guys through the process a little bit. So I'll catch you guys tomorrow. Today is pull day, so at 9 o'clock tonight Eastern, I'm going to go to the gym, and I'm going to do all the push exercises, and we'll just start the process over again. So yesterday was a very nice rest day. I kind of binged a little bit on food I shouldn't have, but I'm going to work it off this week. So, and again, I'm going to make sure that I hydrate 3 to 4 hours before going to the gym. That way I'm not bloated and uncomfortable at the gym. Using moderate weights. I'm not going to try to ego lift or anything like that. I'm going to do proper warm-up, proper stretching, all the good stuff. And it's good to see that you guys are also getting motivated and kind of getting involved in the exercise stuff, because I want to make sure that you guys are here, not just in the market, but on the planet for a very long time. And this is kind of a step in that direction, as long as you don't hurt yourself. So with that said, I will catch you guys, and just keep managing that risk, and we'll see you next time. Bye.